Hey, what's up everyone, and welcome to episode number 14 of this educational video series. I'm your host Vijay and I'm a CPA. Today we're going to take a look at an issue I get asked a lot, and that is how long should I keep my tax return and related documents once I have filed my tax return. There are very specific requirements for this. And in this video, we're only going to take a look at the requirements as it's concerned to the income taxes in the IRS. There are different requirements for the employment taxes, and also there are different requirements for the state side of the tax returns and related documents. That's a whole another topic for another issue, because different states have different requirements. It's not enough time in this video to cover every single state. So we're just going to take a look at the IRS requirements when it comes to the income taxes. So let's dive into it. So let's take a look at the overview first. What type of documentation should you keep? So there are specific requirements as defined by the IRS. You must keep the documentation that supports every single income, expense, or a tax credit item that you claimed on your tax return. Every single one of them. And the length of time you should keep this data really depends on the period of limitations, also referred to as the statute of limitations. The period of limitation is simply the period of time in which you can amend your tax return to claim additional credit or refund, or the IRS can assess additional tax or audit your tax return. Now, the basic requirement is that you should keep your documentation supporting income, expense, or tax credit on your tax return for at least 3 years after you have filed your tax return. So, as per the IRS, the date you file your tax return is simply the date of the original tax return due date, or the actual date that you filed your tax return, whichever is later. So for example, let's say you file your 2014 tax return in February 2015, whereas the original due date to file that return was April 15th April of 2015, then the date you would have considered file your tax return for the statute of limitation purposes is the later of the date you actually file your return, or the original due date. Since in our example the original due date was the later of the two, then they would be considered the date for the statute of limitation purposes. So you should keep your data for 3 years, starting with the April 15th of 2015. So up until April 15th of 2018. That's the basic requirement. I hope that makes sense. If not, then you can just pause and go back and rerun the tape. It'll help you understand the concept a little better. Now, there are situations in which the IRS, the statute of limitation or the period of limitations, greatly expanded versus the basic 3-year requirement. If for some reason income was under reported by at least 25%, then statute of limitations becomes 6 years, means IRS can go back as far as 6 years if for any reason the income was under reported by 25%. If for any tax year you did not file the tax return, then you should keep the data pertaining to that tax year indefinitely, because the IRS can go back as far as they want if no tax return was filed. If a fraud return was filed, similarly IRS can go back as far as they want to assess additional penalty, taxes, whatever. If a fraudulent return was filed, and in that case you should keep the data indefinitely. If you file a claim for a worthless security, then you should keep the data pertaining to that tax return for at least 7 years. Now, worthless security is another topic. In nutshell, it just means that if you own share in a company and the company went bankrupt or for whatever reason, the shares of that company became worthless and you claimed a loss for that, then in that case you should keep the data pertaining to that return for at least 7 years. Hope that makes sense. Now, a few things to consider. Along with saving the document, you should also keep the filed copies of your tax return, right? Just goes without saying. If for any reason you need to go back and amend it, then you need to have your originally filed tax return on hand. As I mentioned before, different states have different requirements. Many states follow the same requirements as the IRS, but many states do not. They have their own requirements, so you should, depending on which state returns you file, you should definitely look into the state requirements for that particular state. Now, certain documents, such as if you purchased a building, or if you purchased another big assets, or even purchased a security like shares of a company, then documents pertaining to that particular transaction you should keep much longer than the required period of limitations, because building typically is used for decades. I mean, if you buy a building for your business, then typically it's going to be used as long as you're in the business, which is hopefully for decades and decades to come. So you should keep that data much longer, if not forever, than the required statute of limitation. Now, the IRS recommends that you save any documents related to the purchase of the assets. You save those assets until the statute of limitation expires for the year in which you dispose of the asset. So, for example, if you bought a building in 2015, but then sold the building, let's say for example purposes, in 2040, then statute of limitation for the 2040 tax year will expire in 2044. So basic requirement, unless you have any of the specific other requirements that we mentioned earlier. So you should keep those documents pertaining to the building until the statute of limitation for the year in which you sold the building expires. So I hope that also makes sense, everyone. And the one thing, and the last point is kind of my take on this. And back in the days where we had to save the physical documents, I could see how that becoming cumbersome if you as the business was operations in many years. But now with the cost of digital documents, savings and everything is so low that you can just simply make a digital copy of the documents and save the documents forever. I mean, it doesn't hurt, right? It doesn't save up any space in your office or in your home. It just sits there in an online folder like a Google Drive or even iCloud or whatever. There are many other services like that, very inexpensive and pretty reliable and safe. So just save the documents forever. It doesn't hurt. I mean, for any reason you need to go back and take a look at those documents, just there. So hope that makes sense, everyone. If you have any questions or need additional help with any of the topics that we discussed today, feel free to reach out to me. My contact information is on your screen. I'll be more than happy to answer any questions you may have. Now, a couple things before I sign off, everyone. As I mentioned before, I'm a CPA and I own an accounting firm that specializes in working with small business owners with their tax and accounting needs. If there's anything I can help you with, I'll be more than happy to talk to you about that. Additionally, if you find the value in the videos that I create, don't forget to hit that like button, share it with your friends and colleagues who you think may benefit, and just subscribe to my YouTube channel so this video will show up in your YouTube feed. So that's it, everyone, for this week. Hope you found some value in today's video, and I'll catch you all next week. Take care.